Okie doke, let's wind up the clock and have a look and see if we're live on YouTube. Stone the crows and starve the lizards. It looks like we're there. Okay, that's a good old Aussie expression, I've got to tell you. And
I've heard the stone the crows.
yeah, I've probably said that a few times. Starve the
Well, but
lizards.
yeah, I've heard stone the crows. That one is a popular phrase. I've never heard starve the lizards.
I don't know where it comes. Don't ask me the derivation. I've got absolutely no idea, to be fair. But
Yeah.
it's a thing. It really is a thing, believe it or not. Hi, guys, and welcome to the US session. We're about 29 minutes away from US Open, and we've had news already on the dollar. We'll have a look at that in a tick. We've had a bit of movement today, I've got to tell you. Speaking about the dollar, it is as strong as a Mallee bull. And I'm thinking that's a good thing probably tomorrow's terms for me. Today's terms ain't so good because it's kind of got me on the sidelines a little bit. It's exactly what I wanted, but it has got me on the sidelines. We shall see if we can make any sense out of it from a slingshot or currency pairs point of view in the next little bit. But first, let's bring Ash on board. And Ash has got a very nice trade going short on the FTSE. Didn't quite trigger the limit order though, mate.
No, it didn't. No, it hasn't triggered the limits order. But you know what? I would say to everybody, don't be too concerned because it's still got a fairly good chance of coming back, even if it's not today. You know, it may not come back today, but I think it's got a fairly good chance of coming back. And actually, you'd probably want it on the second wave rather than this first wave. But I'll quickly take the screen if that's all right, mate.
Go hard, mate.
Okay, so this is what we got on the FTSE. That's the UK 100 you guys are trading. This is the futures. And we were looking to try and get in around about this level here, which, you know, it was about 20 pips away from that point. And realistically, you know, even if you got in here and had a stop there at the best possible level, yeah, I mean, you're pretty much on a one-to-one basis, so that still isn't the best entry in the world anyway. So no big deal. There was a good entry along here, obviously, but look how close we are to this, and that would suggest there'd be more of a bounce than we got. So so that one's a difficult one to get on board with. But I've got a sneaking suspicion that we're coming back anyway. You know, we're at a fairly good level. And as I say, it might not even be today. It might be that we have got a market which is going to give us something of an evening star. Not the best evening star, because really this should have gapped up rather than being an inside bar. But it is negative. You know, you look at this inside bar followed by a test of a high, and then this bar closing anywhere near these lows here is going to suggest that any upside might well get gobbled up to some downside, and it still puts this it still puts the low end of this bar two of the 3 bar pattern as a potential area to try and get into this trade. So all is not lost, and I don't think we should be too concerned about this market, about missing any trades. If you guys aren't in this already, no big deal. So it's still got the trend line here. You know, this looks better. This looks a lot better. You know, when now it's come down a little bit, it means the next bar can just edge up higher into the trend line, giving us some confluence in this area. So actually, leave the order where it is. That would be my personal advice. You know, leave the orders where they are. Don't worry about it. If it comes back, it's going to look even better for some downside. It looks like a decent test. But, you know, spreading its wings out here or stretching its legs out here beyond the trend line is actually a much better signal. You know, it means that there is some genuine weakness in this market because it's taken it through some of the significant levels. So anything that pops back up again is a better trade in my opinion. So actually, contrary to thinking we've missed an opportunity, my thinking is this is a better opportunity. So we really should be celebrating this and not being too concerned with the price action at this particular stage. So let us take it for what it is and see what is offered to us. And if there's no offering, then it still wouldn't have been the best. It still wouldn't have been the best trade for us anyway, and it still wouldn't have been the best opportunity. Not a nice, clean, safe opportunity, which is what I'm trying to give you guys. I don't want to give you the opportunity. I don't want to give you the trades necessarily that you might take, just because obviously we knew we wanted to go short on this one. But what would happen here? We go short here and it gets swallowed up. What happens if we go short here? At the double top here, it turns and it goes higher again. So what we're trying to do is get a nice clean entry. That's what I'm trying to give you guys, a decent signal, a decent pattern. So what we'll look for now is the return into this area somewhere along the line. And that will be right on top of where our entry price is. So it might seem like a long way away right now because it's about 120 pips, but no big deal. That's the way the market is currently moving. So it's still going to wait on that one, mate. I don't see any other issue there. S&P is also potentially showing some signs of weakness, and actually, who knows? We might get the most ideal reversal signal where this does actually become a neckline along here. That becomes a neckline. Oh, that's not a very nice pen. There we go. That becomes a neckline along there. Let me do this. This becomes a bounce point there. And then we do have just our inverted, just our head and shoulders pattern. That's going to start looking a lot better if we can get that. So who knows? If that's to happen, then you've got the neckline to try and take profit. And then if it goes and comes back again, then you got your re-entry after taking profit here in the first instance, and then we should be good to go. So
hey, can we look at the daily chart? And we spoke about a lot last week. Was it last week, or maybe even last week? We spoke a lot last week about the sentiment cycle. And, yes. And we decided that if we poked our bib through that high, it wouldn't be a bad thing, and maybe the turning point. Maybe this is it.
Well,
question mark.
Yeah, well, this is a slightly different chart. So we were talking about the sentiment cycle on the FTSE. You're absolutely right.
Yes.
Yeah. And saying that if it poked itself through the high, it wouldn't be the worst thing. But yes, you're absolutely right. Yeah, I mean, exactly that. I mean, it's a fascinating chart when you do compare it to the sentiment cycle, and I would encourage people to look at it. And this is the thing, there are so many tools that we all end up using, and all we're trying to do is give ourselves the best opportunity to make money in the market. Now, that can be done by using the sentiment cycle, or some people use seasonality. Some people use fundamentals. Some people use just technicals. My personal sense is to use all of them. I'm a bit kind of all in if I can. And I do remember, the guy that taught me how to trade. I remember asking him one day, what's the most important time frame that you look at? And he kind of, he gave me a bit of a derisive laugh and said all of it. And I think he was basically saying, like, there's no shortcut. Don't try and take a shortcut.
I mean, don't we all ask the question, what's your best candle pattern? What's your best this? What's the best currency to trade? Et cetera, et cetera, et cetera. It's not that easy. It's not as definitive as that. There is no one answer.
No, because it's all different at different times, isn't it, mate? And you might kind of see what is the pattern and the strategy that you're following, but if you don't check, and that's the thing, yes, I have a perfect setup, something that I would look for in my checklist as a perfect setup, but that perfect setup can still appear right on top of monthly or weekly resistance. So if it, or on top of a pivot, because it doesn't involve those aspects. And it's only sort of like, you know, the more you trade and the more you kind of see those levels that you go, actually that particular setup has now got a caveat. And if it's got a caveat, it's not the perfect setup anymore. So I can't go all in. And I think that's effectively the point he's making. The point that he was making is, well, just what you said, that there's very, very rarely the perfect setup and the perfect answer. So, you know, how you approach a setup in the market might be different each time. And this is, you know, again, this is coming back to the journal. The ideal thing that was going to happen for us with the FTSE was to come back to a price point and get us in the trade. But that price point's up here. But with the pivot underneath the price point, it suggests that it'll probably be the pivot rather than the price point when they're both so close together. So if we're keen to get in short, then we really need to use the pivot rather than the upper price point. And you know, that's kind of case in point, really, because the you know, the strategy that I follow doesn't involve, you know, yours is different, Jeff, obviously, but mine doesn't involve pivots. But the pivots do play a part. So, you know, in when I look at my analysis, you know, my perfect setup doesn't involve the monthly chart, but I still need to check the monthly chart, because if I'm just about to trade right into monthly resistance and going long, then that would suggest to me I've got a pretty dumb trade on. So, you know, a setup isn't a setup in certain parts of the chart, in my opinion.
There's another thing we need, speaking of that point, there's another thing we need to add to our journal. Don't necessarily need to do it today, but we need a column called mistakes. And
yes.
If we make a mistake, we need to enter into that column that we made a mistake. And, you know, that may be just exactly what Asher said. We may have traded into a pivot where we're not supposed to. We
Yes.
may have given a tick to a setup that really doesn't deserve a tick, etc., etc. And we need to note that. And then after all of that data is filled out, let's say over 3 months' time, and you come back and you have a look at that column and you delete out of your calculations the ones where you made a mistake, and you see the difference that makes between where you are and where you should be if you didn't make those mistakes. Interesting. I mean, that spreadsheet can go on forever and ever and ever, but I think that's a very important one to add. And we must update that, man. We really do.
Yes. Okay, so let me give you the Evening Star as well. Okay, the Evening Star. What the classic Evening Star should look like this, and it's the opposite to a Morning Star. I'll show you the Morning Star as well. So the classic Evening Star.
You got a good one there on the 7th of April.
The 7th of April. This one here?
No, that's the 9th of April. Go back to the previous swing high.
This one here.
Yeah, yeah.
Oh yeah, well, that's a beauty. That's a beauty. Now, let's talk about the classic, and then we'll say why this one qualifies. The classic Evening Star, as Jeff has illustrated, has got a bar that goes up. Now I'll use OHLC bars. In fact, no, I won't. I'll use candles because it's a candle bar pattern. It's a bar that goes up. Now the classic Evening Star should be a bar that gaps, because it's like a shooting star. So there's a bar that gaps up and gives us effectively a high test. And then the third bar is a bar that closes at least 2/3 into bar one. Closes at least two-thirds into the body of bar one. So anything more than that is gravy, and it tells us a lot. So that is the classic Evening Star there. But you can see this is a decent example where you would certainly, you'd be able to bend the rules a little bit. There's no gap there, but you're unlikely to get the evening star is much the classic evening star is much less likely to happen. These candle patterns are from Japanese candle patterns that were to do with rice trading many centuries ago. So there were gaps in the market because the market closed, and that's why you get gaps in the market. So if you look at a stock market, there are gaps all over the place because you get finishes at 4:30. Let's talk about the FTSE 100. Finishes at 4:30, opens at 8 a.m. So there's a huge amount of trading and thinking, if you like, that can go on between this point and this point, which is why the gap is created. But now we don't really get gaps in indices, and certainly less so in currencies, because they are open every day, effectively. Apart from the weekend, you might get a gap over the weekend, but that's the only time you're going to get the gap. But so that's why this one qualifies. It opens pretty much where the other one closed, no problem. It tries to push to the high, unable to do so. But the key with the evening star is the body is very, very small. And really, you want the body to be in the lower end, the lower third of the bar. Now, this doesn't quite do that, but it's close enough. But this is the bar that really kind of gives us the signal, because this bar, not only does it close 2/3 into the body of the previous bar, it engulfs it, and it engulfs this one and this one and this one and this one. So this is a really good example of an evening star. Look at this one. Very similar looking. It goes up. We get the gap up, high test. So that's the first two bars are perfect with that. But look at bar 3. Doesn't close 2/3 in. That would need to close down there for it to qualify as an evening star. This one qualifies, push up, high test. This one closes below the low of that one. So you're starting to see the pattern there, Helen?
While you're waiting for an answer, mate, there's stuff that keeps me awake at night, right?
I didn't watch that thing. What was it in the end? I can't remember.
Oh, did you? Or you didn't?
No, I didn't I forgot.
Did everyone do their homework last night, guys?
I forgot. Yeah, so let us know if that makes sense, Helen. But it's a 3-bar pattern is the key. 1 bar up, 1 small bar where it tests a high and breaks away a little bit, and then the next bar just thunders to the downside. And that's what we've got kind of forming today on the daily, on the FTSE 100. So when we look at this on the FTSE 100 here, on the daily, we've got. So the reason this isn't at the evening star is that this bar should have closed. This bar should have opened way up here. For that to qualify as an evening star, that would have had to close. That would have had to open, way up to the top. And the morning star is the exact opposite, where you get a low test bar. I'm going to see if I can quickly find these first 2 bars of this perfect for the morning star. 3rd bar, no good. This one's pretty good. It's not too bad. I'd be quite happy to treat it like a morning star. Treat it like as a reversal signal. Some of these, yeah, difficult actually. Difficult to find the morning star so far, but you'll find one somewhere on your chart somewhere. Yeah. 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 Go on, mate. Give me the things that keep you awake at night. Sorry, I'm digressing.
I'll give you one. I'll give you one now, and I'll probably save one for a little bit later. But I want this one, fully.
Not always the same, Helen. You're right. Yeah.
So I can go different. So you've got a jar of poison, I suppose, in the cupboard, right? Everyone's got some poison under the sink or in the medicine cabinet or whatever. Question is this: they've all got an expiry date on them, right? So what happens when the poison bottle reaches its expiry date? Is it more poisonous, or isn't it poisonous anymore?
Well, gosh, yeah, that is a good question, mate.
That's a good question, eh?
I've got an answer.
Go on then.
Well, my answer is that it's not fit for the purpose you bought it for anymore, because it's expired. So it might be more poisonous in certain sense, but not in the way that you need it.
Yeah, but that's not the answer.
I like it and I'm sticking with it. Helen, anyway.
There's going to be a few variations on a theme there, I'm sure. But
Yeah,
that's my
have
number
you got an
one.
answer? Have you got an answer for that?
No, I haven't. That's
No,
why I
that's
keep
so.
you awake, for God's sake.
So I don't know why mine's not the answer. I quite like my answer. Um, just, just on the what do they mean? They are signaling reversal. You would treat them as a reversal pattern. When you get that, you treat it as a reversal pattern. It's suggesting that that we are changing direction. So no more upside if it's in an uptrend.
Hey, US market opens in 10 minutes time.
Yeah.
We've already had news. We've had big moves today on the dollar. Good move on the FTSE. Have you got anything upcoming before I go through some currencies?
Just one other thing.
Yep.
We were talking about gold earlier, and somebody was saying, you know, is gold showing us a reversal? You know, is this a reversal signal? And I said no, because we haven't broken through the trend line. And, you know, this is really, I guess, case in point why we had to wait with the FTSE as well. You know, it's pretty much exactly the same thing was going on with both of them. We saw some weakness in a 4-hour chart, but the FTSE's now broken down a trend line, which means that we're looking for retracement. But look what happened with gold. It kept right on top of its trend line, kept its structure, and actually this is back in buy area. You know, this is back to being a potential buying opportunity rather than selling. So until it breaks down these levels, and now it can break down a slightly higher level, it can break down this level instead, because this is, you know, as long as this bar closes in this area. But you know, we're starting to get on top and sneak in that trend line as well, a little bit higher. So the higher we go, the higher the trend line goes. So now we need to break down 1740 and hold, and if we do, that will signal a downward move in gold. So just to kind of illustrate the point that just because it's moving down, it doesn't mean it's reversing. It could be a buying opportunity, and while things are moving down in an uptrend, we've got to look for it as a buying opportunity rather than a selling opportunity. Until even if we want to sell, you know, even if we want to sell, I want to sell the FTSE, desperate to sell the FTSE, right? But we can't treat it, we can't trade it short until our signals and our lines have been breached. Well, of course we can trade it short, but we're not going to trade it short. We're going to be safe in the market, and the way to stay safe is let things get breached. Because when we look at this and go, oh man, we've missed the move, probably not. What we've done is confirm the move. And when it comes back again, then we get into it. So right now, what we've got is, I suppose, phase one of a 3-phase trade. We want to get in on phase 3. Phase 2 is the retracement, and then we want to get in phase 3 as it comes back again. And if it doesn't come back, so be it. You know, it's just one of those things that we can't beat ourselves up on these ones, because otherwise we're going to take every single trade when it starts to look like a short, rather than trading the way we should trade. And you know, some of these just will go and they'll be gone. This is a good example. This one never came back. Bang, bang. Didn't come back till there. Difficult one to enter on. Straight way down again. Came back there. Difficult one again to enter on. So actually, this move on the way down was pretty tricky. Unless actually this one would have been okay, or this one might have been okay. But if you miss this, you're basically missing the move. You're missing a 2,000 pip move, because this one, as it breaks through this trend line here, it just doesn't come back. Again, it was close there, but it just didn't happen. So same thing might have happened today. I don't know. You know, maybe we got close without it coming back, and we missed the eventual move. But I would do the same thing every single time if I'm advising you guys, you know, the best way to trade. Better just to wish you in than wish you were out, and not get involved in that. Yes, it is ace. Oh, slingshot. No, it's not a slingshot. Jeff will take you through any slingshots. I am certainly far from being a slingshot
What chart did you have up, mate? So I can answer that question. I don't know. What chart
I
was
guess
it?
the FTSE. Well, you know, if you're talking about the FTSE, the ABC, down, up, and down.
Yeah, but we haven't retested it with
No,
a bullish decisive bar. That's what we need to see.
right. We need a bullish decisive bar ace to make it a slingshot. So that's where
Yep.
we're at with that.
Yep.
So okay, mate. Well, let me pass to you.
Roger D, and I will have a look at a few things. I will answer your question, Crystal, when we go to the journal a little bit later. And we've dealt with yours, Ace. That's all good. I think we're all good. And we've had our first, well, not divorce, it's a marriage proposal refusal in the chat box. Okay, that's good. Righto, let me take a look at these things. Right now, issues, guys, issues. We've gone too far. We really have gone too far for me to be looking at most of these trades that I would normally be looking at. But one thing I do want to show you is this one, pound Aussie, that we got out of down here, you'll recall. We got out of the short because we were expecting a bounce off the bottom of this range and pretty much at the support level. Well, did we get one? Yeah, we did. Did everyone watch Crocodile Dundee? Did you watch Crocodile Dundee, Ash?
Yes, I did. Yes, I did.
Yep.
Oh, look, that's yeah. Yes, I've Crocodile Dundee. Yes, yeah.
Right. So that's not a retest. That's not a retest. That's not a retest. That's a retest, right?
There you go. That's what we're looking for with the FTSE. This is perfect, mate. This is like seeing into the future of what we want with the FTSE. Everybody should really take a mental image of this to tell us what we're going to do next with the FTSE. I'm liking this.
And it's exactly what we've asked for, right? So we've asked the market to do something for us, and it has delivered in spades. I've got to say, I have absolutely no idea what's driving it so fast. That's a little bit of a shock to me. Yes, I expect it to go there, but did I expect it to go so fast? Answer no. Now, what we need to do is watch very closely at this point, because here is where we want to trade from, right? We've got a nice confluence area, weekly pivot and retested trend line. We've also got a horizontal level coming across here, which is pretty much bang on where we are right now. So let's pay attention here, but we can't find an entry anytime soon because we need to either do one of two things. We need to have a bar that tells us this level's been rejected, or better still, we need to break resistance. We've done that. And then we need to come back underneath that resistance, put in a lower high, and then go. Now, there's another way to do this. And tomorrow, maybe even today, in fact, we could place this trade. We could even do that. I'll just have a look at it. I think I told you guys.
Is that dollar, pound dollar?
This is pound Aussie.
Pound Aussie.
So 120 versus 82. It's about 1-to-1 to the low. Yeah, look, it's not too dusty. What we would be doing here is playing false break, using this bar as the breakout bar, right? Now, there are a few ways to play a false break. One of them is trade directly under the bar that broke out. I'm a little bit dubious to do that, although it is a good play. And the reason is I want to see more reward for doing that than I have at the moment. I've got 1-to-1, so I'm kind of tossing up. But if I'm kind of tossing up, I think I probably need to say no, wait, because it's not absolutely clear to me. And the untested weekly pivot is still there as well. So it could be that we come back and retest this confluence area, then go to the weekly pivot, then we've got a problem. But if you are paying attention, this bar here is often tradable, but you need a good reward underneath you to take it. So break a structure to the high side or even to the low side. If it's a very good, strong, decisive bar, really what you're trying to achieve here is if the bulls are in charge, they're just going to keep going. If they're not, then the bulls are wrong at this point underneath this bar. And that's what you're trying to pick up. You're trying to pick up that, okay, we're wrong time, and therefore the bears take over. Just not enough reward there for me at the moment, I don't think. And this weekly pivot untested is still in my mind as well. So I go back to what I first said, and that is these have gone a little bit too far, too fast for me, and I want to see what happens next. But if you have a look at this, that's the trend line that we're talking about, and that is a retest. That really is a retest. So am I expecting this to go short again? Yes, I am. It's a matter of applying my strategy here at this level or this level. And that strategy demands that I have a break of resistance, and then that break is proven false. So yes, I'm totally on board with this, except for the fact that I don't have enough reward and the weekly pivot's not tested. So those two things are keeping me out at present. What I will look for is potentially on a smaller time frame, and that's not evident at the moment either. But on a smaller time frame, I'd be looking for a resistance trend line to come through here, for instance. And at this point in time, that's just not here. So I've just got to I've just got to wait and be patient and see how we go. Again, if you're so inclined, this on an hourly chart, far more dangerous than trading it on the 4 hour. But if you consider that to be the breakout bar, then maybe you could trade it short underneath here. But where are you going to put your stops? Above this, and again, your reward to risk becomes just that little bit too dodgy for me. So I'm going to wait and see what I can find. And of course, those of you, I should explain and apologize to those of you who were in the room last night and took this. I did say we were potentially early with this trade. Well, yeah, we were. But what occurred, DR1 was bang on here, just above the close of that bar. And really, my rules state that I shouldn't trade through a resistance level without taking profit. And I did that. And I shouldn't have done that. That goes in the mistakes column, guys. That goes in the mistakes column of your journal. Now, in my own defense, I wasn't in front of the chart. We were talking about something completely different, probably about what keeps me awake at night, sadly, at the time. I don't think we were. I think we were talking about something else. And this flew up there and came back very, very quickly, as you can see. At the time, I can't remember who asked me. Maybe it was Ace who asked me the question, where's TP1? And the market had already come back down here. Well, we'd already gone through TP1 where it should have been. And I mistakenly said, well, 50 pips will now do you. That was wrong. What I should have said is, okay, we've already missed TP1 and we probably should have closed the trade. So apologies for that. That was a mistake. And I have given myself 50 lashes and I've got a very sore backside from kicking myself up the bum. So hopefully I won't do that to you again. Pay attention is when you're in a small time frame trade or intraday trade, you can't take your eyes off it because that's what can happen. So that's the danger of talking too much about too many things. So apologies for that. If you did lose some money on that, that was not a good example of how we should have traded that. Euro Aussie, we also placed the order on Euro Aussie. And just like Pound Aussie, we were a little bit too early. Fortunately, this one didn't, fortunately or unfortunately, this one didn't trigger. And obviously, since it triggered today. And if you happen to be trading in the Asia session, you may well have picked that up. I do not trade 30 minutes or 1 hour charts in Asia session. And in fact, I'm very rarely in front of the chart. So what what happens here is probably irrelevant to me, but when I look at that, there's two opportunities to trade that from my strategy's point of view. One would have been above that bar, the other one would have been above that bar. This one a little bit riskier than that one because there's not much room for profit there before yesterday's high. But I might as well talk till the cows come home about that because it's gone. There's nothing we can do about it except wait now for our next opportunity. And this will be exactly the same as I've just described on Pound Aussie. We need something to trade off from my strategy's point of view. And that can be the top of a rectangle. It can be a trade line. It can be a pivot. At this point in time, what I've got is price struggling to get through the top of this range, which I've now put in the chart. Obviously, being a range trader, what I'm looking to do is trade this back to the bottom and beyond if we really get lucky. I won't trade that bar there. A few reasons. Number one is we haven't really come back inside the range yet because we haven't been out of it. Number two is I don't have a lower high here. Number three is I don't trade when I've got 1, 2, 3, 4 indecisive bars sitting there at the very same spot. So for that reason, the answer is no. If this is to reverse here off this bar, then I'd be looking for the lower high to be put into place before I trade it back to the short side. But don't forget, we've still got this untested weekly pivot above here as well. So that adds to the equation as to why I can't trade at the moment. So I'm pretty much in NLNS mode, no longs, no shorts for a lot of these pairs. Now, getting off the daily bar, we're now out of CAD Swissy we took profit. I can't remember whether CAD Yen or CAD Swissy that we've actually banked twice on, and we had our stops above. I think it was CAD Yen. So CAD Swissy, I think I've taken one profit only on that, and we have probably a small loss on that one on CAD Swiss. I haven't checked my charts yet. This is now an opportunity for us to trade short because, and this is what we asked for, of course, we asked for a bounce off the top of our channel, which of course is a range. Then we asked for a lower high. I don't see a significant lower high here. But what I do see is now that we've got the pivots broken, the potential for price to come back here. And I'd love to see it back at the daily pivot. That would be choice. If that were the case, put in the lower high there, then we can look to trade it short. But once again, not now. On the smaller time frames, it's a bit of a mess, to be fair. We've traveled too far today, so the tendency when that happens is for price to come back, especially during US session. If we've had a very, very strong bearish day on either or both of the Asia session and UK session, oftentimes we'll find that that will be erased to some degree, and it wouldn't surprise me in the least if we come back to test the monthly pivot or the weekly pivot and trade line confluence here. And of course, then if we go back to the daily pivot, we can look for that lower high on the bigger time frames. CAD Yen in the shadow of oil, like all of these CAD pairs, has now taken a bath, and we did win on this one, but not as much, of course, as we would have liked had we gone up here. We're now out of the equation as far as trading the higher low back into the range is concerned, for the simple reason that we are no longer in the range. So, okay, I can see double bottom, I can see higher low, I can see higher high. Yes, mate. No?
No, it's all right. It's all right. I've just had a visitor.
All right, happy days. So what we've got to wait for now is to come back inside the channel. So that's what I'm waiting for now, price to get back inside the channel. And if we did that and maybe retested it from below, that becomes an opportunity to trade long again. But as I keep saying, all of these CAD pairs are reliant very, very much on what oil's doing. And if you have a look at what oil's doing, it's pretty much at the bottom of this really incredible 19.85 or below $20 for oil area. Incredible that had you thought about that, only a matter of a month ago, or even a little bit more than a month ago. Yeah, right, of course it will. But there it is, and that's what can happen. So this is the pound. The pound, we're still in the long, of course. We've taken 2 lots of profit on this, so we can only win on it. It's just a matter of how much. I'd much prefer if my stop was underneath the monthly pivot, I've got to say, and this has moved a long way today. That doesn't mean it can't rally, just what I've said before about the US session. This could actually reverse itself, and don't be surprised if that happens. Not saying it will. It could, of course, just keep falling away. There's no ifs, buts, or rules about that. I don't know what's moved the market, as I said, so dramatically and so quickly. And that surprises me somewhat and confuses me, I've got to say. But at the end of the day, if we ask for retracement and we get it, and we don't pay attention to it, then we're pretty much blockheads. So really what we need to do is just wait for our setups now. And if they come, we get back into the long. If they don't, well, then we watch it go down until we get a reversal pattern again. It's pretty much the same formula each and every time. The dollar strength can be probably measured against dollar yen, because the yen, of course, is a risk, pardon me, a risk off currency. And we're seeing that probably in the last 24 hours or so. But as we go risk on next time, you will see the reverse of that. And what is confusing at the moment is which is the stronger, the dollar or the yen. We are in this short, and absolutely no reason to do anything. And I do think this is probably a scale-in opportunity if it goes to the right level. I'm not sure what that level is, to be fair. If I go to the daily chart, that probably tells me that we're maybe on that level, or maybe it's just a little bit higher and picking up this low and this high here. Maybe. I'd be happy to scale back into this if it does set up. I can't see a setup at the moment, I've got to say, but I would be happy to do that. Let me give you an example of what a setup would look like. There's our resistance level. Break here, test the weekly pivot, get back underneath it, retest it, and away we go. It's always the same with me. If I want to go short, I want to break resistance and prove that resistance false. So same, always the same. Euro dollar, wow, it's had a bit of a tank, you would have to say, as has most currencies against the dollar today. This is, just impossible to trade for me right now because it has gone so far. You'd be thinking, okay, it's gone so far, it's got to retrace. But there's no such thing as got to. And again, if you measure the strength of that move, you're thinking, well, and here's the reason I'd like to know what's caused that. We've gone 130 pips already. Now, I don't know what the ATR of the euro US dollar is currently. It's probably around there somewhere. Let's have a look. We can do another lesson here, I suppose. So if we go insert indicators and go to average true range, 20 days will do, but we need to be on a daily chart. So let me try that again. So daily chart, insert, indicators, average true range. Let's go back 20 days, shall we? Because that's the period we want to look at. So that's 4 weeks of trading. Red will do, and that will tell us. You can see the volatility has gone absolutely through the roof since the 25th of February, and now coming back off, as we know. But look at the ATR, it's 138 pips. How far did I just say that it moved today? Let me measure. From here to here, 133 pips. So we're within 5 pips of the current average true range. Wow. What does that mean? Well, it doesn't mean it's going to stop, but what it does mean is it's going to get to the point where it's a little bit uncomfortable. When I say it, I mean the market is a little bit uncomfortable going beyond that. And that is a flag that you should have in your toolkit. So you're really asking the market, and I'm not saying it can't, of course it can, because we have days where it goes twice its average true range, but it's not the norm, right? So take note of that. We've already traveled the entire average range of this currency pair for the day. So really what that should be saying to you is don't go short right now. So even if this was a retest, you know, if this was a bullish bar coming back to the weekly pivot, which is one of my favorite plays, right, the double cross. If that were the case, there's no way in the world I could go short here for a few reasons. I'm below DS2. The average true range has already been achieved for the day. So no, that's just a no. So you should have flags waving very, very strongly if that's the case. So that's the point probably I wanted to make of all points right now, because all of these things have moved very, 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 very rapidly. And I would be surprised if most of them aren't at their average true range for the day. So what do we do? Well, I sit on the sidelines, quite frankly, until such times as the market cools down. That's probably not going to be now on most of these pairs. There will be a few that haven't moved so much. And you can probably have a look at those. But those that have moved substantially, have a look at the ATRs and have a look at whether you think they can move a little bit more during the day, or if they are actually showing you signs that they want to retrace. So, mate, that's a long way of saying that I, at the moment, not really looking to trade, but look what's happened here to the Aussie pairs. Aussie yen has come back to the weekly pivot. That's exactly what I wanted it to do. And tomorrow morning, I'll be looking to trade that long. Aussie Swiss hasn't done that, so it's still got a way to go. Aussie CAD the same, which kind of underlies how weak the CAD is at the moment, because it just can't drive the Aussie down. So there's another little indicator for you as to what's happening with the CAD. And Aussie Kiwi, again, shows you that the relative strength of Aussie and the Kiwi is pretty strong in the Aussie's favour, because this hasn't come off and the Aussie's in struggle street today. And that's how far it's moved on the US dollar. I want it to come down to the weekly pivot. That would be absolutely gold for me. And I would be looking to trade this long tomorrow if that was the case, if I got the right scenario. All right, so I know there are a few questions. Oh, thank you, guys. Thank you. We should take a very small. Yes, we should have taken very small risks on that trade. We did say that. I'm not beating myself up, except that there's two things I hate to do, PL, three things I hate to do when trading. One is tell people to trade something that doesn't work. Two is to ask people for money. And the third one I can't even remember. But they're the three things I hate to do. And, you know, if we didn't have to do any of those three things, I could just do this all day long, because it's so much fun. But at the end of the day, I guess you've got to sleep. It's as simple as that. Have I answered all the questions? Fed.
Have you seen that one? How do you determine how big the rectangle that you draw is?
Okay. I haven't seen that one. Who asked that? Where's that?
Chris. It's about 3 back.
Okay, got it. 3. How do you determine how big is the rectangle that you'll draw? Okay. Becomes a visual thing, Chris, really. And at the end of the day, if it smells like a rectangle, if it looks like a rectangle, it's probably a rectangle. But there are rules that I use, and they look like this. Let's find something that's ranging at the moment. Swissy yen ranges a fair bit, so we can probably have a look at that. All right, there's a rectangle that we did have. and I can probably expand that for you. So let's get rid of it. What I look for is, as I just said, a visual that tells me, oh, that looks like a box, or that, okay, maybe a box, or it may be a triangle, or it may be it can't be a circle. Going back to who said that, I think it was Crystal maybe yesterday, was going to draw circles. What we do is we look for two equal highs, right? Now, they can be opens, they can be closes, they can be highs, they can be whatever you want them to be. As long as they're uniform, that's what I'm looking for. So visually, I see this close here and this close here are probably roughly the same. So I would probably pick those two, but you could go any one of these. Really, any one of these spikes would be just fine. To me, they're equal. They may not be perfect, but they're equal. And as soon as I've seen two of those, I then look for two equal lows. So there's one there, and you can use the spikes, as I said, and the opens and closes. That's perfectly fine. So what I would do is just use those, go to my rectangle. So let's use that open, sorry, that close, and come across here. I think that's the one I had in before, right? Because I've got equal lows here and equal highs here. So I would expand that now because I see down below here something a little bit more. So we've really got even a bigger range now than we had before. So the rule is, as soon as I see two equal highs and two equal lows, then that to me becomes the beginning of the rectangle. Now, obviously, I can't trade backwards. Wow, that'd be good, eh? But what I'm now looking for, once I've established those two lows, is either a break like this, which becomes a false break. So the false break, as always, is price comes back into the range, then retests either the bottom of it or gives me a higher low than the previous low. So if I see price back into here, come back and retest that, or even give me a higher low in this vicinity, that's my signal that price is ready to go long. And I would look to trade it long. As soon as it got there, it can do one of two things. It can bounce off the top of the range like this has here, or this has here, or this has here, or this has here. And as soon as I see that happen, I'm then looking for exactly the reverse of what I just said. I'm looking for a lower high. So if I got that candle here on the daily pivot as a lower high, then I'd be trading that towards the downside. Of course, it's better if we actually break out, then come back in, then get the lower high. But it's always the same. But to answer your question, two equal highs and two equal lows are the beginning of your rectangle. And as soon as you've got that, happy days. Yeah, trade with the circle, Lewis. That's right. We'll, that'd be nice. Thank you, John. Excellent, excellent. That's what we're trying to do, mate. That's is get you guys up to speed as much as we possibly can. How do you read the value of the ATR from ACE? Okay, let's bring the ATR back up. Insert indicators, average true range. Okay, you can do this over whatever period you like. So if you want to know the average true range over the last 5 days, and I know pro traders who actually use that to determine exactly pretty much what I've just shown you. I've chosen 20 days for no particular reason. It's just a month's worth of trading, and I think that's a reasonable equation. You can go back 10 years if you want, but 20 days to me is just a nice round figure, let's put it that way. So when you press OK, here's your indicator line of what I'm actually on the wrong chart here. So you've got to be on the daily chart, right? Otherwise you won't get it. I'm on Swissy yen here, and it's telling me that the average range is over the last 20 days. I never know how to read these when they get big numbers, but it must be 1116. Would that be right? No, let's try 111. That looks much better. What currency pair? Swiss yen. So the average true range here is 111.65, if you like, for the last 20 days. So if you care to measure all that, that's exactly what would happen. So what it's actually giving you is the average daily open and close, or sorry, high and low of the previous 20 days. That's exactly what it's telling you. So I hope that one answers that question. What else have we got? What we're looking for is to start to take action outside the rectangle and look for a spike after the higher low. Look for a spike after the higher low. Not sure what a spike is. Let me go back though. What was the range we were looking at? CAD, yeah, Swiss yen, wasn't it? Where's that? There. Okay. So what you want to see, and what I always want to see, and I've just spoken about it at length on the currency pairs and trade lines, right? But it can be trade lines, it can be pivots, it can be tops and bottoms of rectangles, it can be tops and bottoms of triangles, it can be anything you like. But what I'm always looking for is price to either bounce off it or break it. If it breaks it, the very next thing I'm looking for is price to tell me what it wants to do next. Now, what it's telling me at the moment on this particular scenario is that it wants to continue going short. Now, you might think that's weird and crazy because that's a bullish bar. If you understand the method that I use to trade, my method is based on cause and effect, not on speculation from a predetermined point such as this one. So if I'm saying that I think the market's going to go short here, I'm not going to take the full risk approach of backing myself 100%. If I back myself 100% here, I get in where this candle closes. I'm not saying I don't do that, but it's a higher risk approach. The lower risk approach, if I think this is going short, is to trade it when it does go short. So really what I'm saying is this candle is in charge. This candle is not in charge. And when these guys take back over, they're going to take over here and we're going to find some acceleration through the bottom of that bar. So when I see a bearish decisive candle followed by a bullish decisive candle, even if it engulfs it, I'm still of the opinion that the safest way to trade this is short underneath there. Now, if these guys are in charge, the bulls that is, then price goes up here and I don't get taken into a bad trade. That is pretty much the premise of slingshot trading. Approach, retrace, advance. So if you like, advance, bounce, continue. So that's the nature of the ABC trade. But every single slingshot trade is pretty much based on that principle. So going back, sorry, I'm really dragging this out and I don't mean to drag it out, but it's worthy of explanation so that you understand the way I trade. When I see that break of the range, that's one of the things I'm looking for. And I can place a short underneath that, providing the other parameters are met, right? I don't go short here because I'm at DS2. So there's a rule I won't break. If, however, this candle is not bullish and decisive and it stays below the bottom of the range, the very next thing I'm looking for is another candle to do exactly the same thing. So not go too far from where that bar, this current one, if it closes below the range, goes. And then I'm looking for another one that re-enters into the range. So what we're doing there is we're building up courage, I suppose, if you like, from the buyers, coming back into the range. And then these guys here say, well, hang on a minute, we want to go short. And they start to sell again. But lo and behold, they can't break through this level again. That's telling me something I need to know. It's telling me that these guys here knew something. They didn't want price to go below here. So when we come back inside and retest that level, bingo, lights start to flash, and I go, right, these guys are actually not in charge. This was a false break. And that false break is proven when I get that higher low. So it's either break and retest short, or break, consolidate, back inside, higher low, long. And it's always the same. I never ever change, never ever vary from that formula, no matter whether it's a trend line, pivot, top of rectangle, bottom of rectangle. That's always going to be the same. Hope that helps, guys. That should give you some understanding as to what makes me tick, and why oftentimes you'll find me going in the opposite direction to, I'll call it conventional wisdom. Ash,
good information. Yeah, I know. Yeah, it's run away with us, isn't it? But no problem. I think we're gonna run the journal once a week anyway, so we can update our trades tomorrow. So I guess make sure that you've got yours, and I'll make sure I've got mine, and then we'll see where we ended up.
I carry mine around with me. Oh, you mean the journal, right? Okay.
The journal. Keep hold of that. FTSE continues to be under pressure here. Not quite broken down beyond what would be a daily structure, but it is attempting to do that. But a close anywhere in this area and any kind of retracement back up again tomorrow would be a great time to sell this one off. So the signals continue to adds to the picture for some further downside. Retail sales coming in absolutely appallingly with the United States Empire State Manufacturing Index. Also an absolute murder of a number, really. It's a terrible, terrible number. So I guess we're just getting what we always knew to be the case, and the numbers are actually starting to confirm what everybody already knows, that this thing is going to have a huge impact, and the impact has now started. So I think we are probably in the quarter where we start to really see the impact of these numbers. Earnings season is going to be of huge interest. I think the banks have already posted some pretty poor earnings, but that's going to be of huge interest as we go further and further on. Just looking at the 10-year bond auction from the UK as well at 0.27. I can't remember what the last one was. I'm going to have to note that one. Previous at 30. Yeah, so the yields are also starting to shrink in the 10-year for the UK 10-year as well. So there are signs and signals that we are starting to weaken. Looking at the German 30-year negative 0.09. Why would anybody want to buy a bond which is in negative? The previous was 0.01, so actually only just positive. So yields also on the longer term, that's quite astonishing. 30-year bonds to be on such a negative rate there. So yeah, the longer term yields on the European 30 bonds as well, 30-year bonds also very, very negative. So we're getting some fairly stark reminders that this economy is in trouble. So we just need the retracement, mate, and then we can get in a nice, safe entry to the downside, and then see what the market will actually churn out for us. But no big deal that we covered so much information today. I think it's a good thing. But tomorrow we've got to get to our journal, and let's hope that we will have some trades in the morning. That's the thing. I think we want to get on the trades early doors when the UK opens up. That'd be even better.
Yes, okay. This doesn't keep me awake at night, but it's very, very interesting, Ash. Yeah. You can see that word I've got on the chart there.
Actions to wealth.
Really?
Yeah. Oh, I think, did you give me the screen?
Oh, I did. Okay. Yeah, I probably need to pinch it back, do I?
Yeah.
Okay. Oh dear, it must be getting late, is it? I can't take it. Why is it?
Helen's asking what does happen to the expired poison. I think I think Crystal said. Right. The
Yeah,
expiry
that was
dates
a good
refer
answer.
to the. Yeah, she said it refers to the cheap plastic packaging breaking down and affecting the freshness of the product or potency of the poison, which is pretty much what I said. I said it will not be fit for purpose anymore.
Yeah, I still don't believe either, but it's not.
Crystal's words are much more eloquent than mine, but
Absolutely.
I
Can you
reckon she said the
can you
same
throw
thing.
the screen at me or not? Or
Oh, let me see
if
me.
not, I'll tell you what to type. If not,
Oh gosh, no, what's happened here?
I don't know. It's all gone nuts.
Oh, here we go. Yeah, here we go. I'll take the screen. In fact, no, it's weird. It's like you've got it already. I'll take the screen to start with. So we're still waiting on this. Basically, this is the area that is the next point of interest. But fantastic! If we can get a nice head and shoulders here, we're in really good shape. Whoops. Get rid of that color. Yeah, we get some support here to give us a neckline now coming up here. This is really going to start looking very, very good for a trade right there. So watch out for this overnight, guys, because it might happen while we're off air. Unlikely, actually. This is a 4-hour chart, but yeah, any retracement into the trend line is going to look really attractive, and that's going to take us back to those upper line pivots as well. Yeah, so I have the screen, mate. So I have the screen.
Righto, on your screen, either write or type. Type if you can.
Yeah.
It's better.
Yeah.
Swim.
Swim.
SWIM. Yes, that thing we like to do in summer. Actually, make it plural while you're there.
Swimming.
No, swims. That's it. Now, can you write it upside down for me?
It'd be the same thing.
It will. Unbelievable.
Swims and swims.
How many words do you know that you can write the same upside down and they're exactly the same?
Oh no, I don't know any others except for this one now.
Mate, you just got to tune into this show every US session, and you learn all of these things.
Yeah. Yeah, well, I'm liking these things that are keeping you awake, and I'm not sure why that would keep me awake. I think that's quite cool, that one.
Well, it makes you wonder if the person is the same as the dude with the thing yesterday. What did he do yesterday? Oh, the clock. It's the same thing, isn't it? Really, when you think of the word swim, where's the word swim come from? Why would you think up a word like that, swim?
Well, I mean, I don't know. Do you know what? I've been out on a flower hunt this morning with my daughter. We got a nice local park here, and I was trying to teach her about the flowers, and we kind of gathered a load and brought them home to find out what they were all called. And I'm actually drawn to the Latin names of all these things. So I'm gathering that the word swims probably comes from some kind of old language like that. Maybe the same thing, because all these things seem to have Latin names that when you start to relate them to what they're talking about, they kind of they make sense. Everything makes sense. It just kind of jumps, very, very small jumps.
Except that you stand on your head and you've got the same word. That really is kind of weird, I reckon. For the Forex Factory calendar, can we say the green arrow is pointing to the event that is going on now? How do we refer to the time as in Singapore compared to the time the conference will take place? Can you
I'll show you
your Forex Factory, mate?
Yep. Yeah. So the Forex Factory. So this is the most recent. Yeah. So this is going on right now. The monetary policy report. So yeah, the green arrow is telling you the most current thing that's happening. And right at the top of your Forex Factory, when you got your columns, your rows, sorry, well, your columns or your rows. If we say this top row, we see forums, trades, news, calendar, market, brokers, login, join, and then a time. So I can see that on my time it's saying 2:38, which is not right, actually, is it? Oh, that's because that's when I last logged in. So if I log back in, now it's updated it for me. So 3:09. So that's telling me the time that I've got, and this is going to tell me. So the green arrow is telling me what's up next, the BOC press conference. So that's the most current thing coming. So if you click on that, so your time, then you can change it to whatever you want. I'm guessing you guys are something like 7 hours ahead. Is that right? Let's do Bangkok. I think
Yep, that's the one.
yeah, something about 7 hours. So save settings. And so now my time's changed to 10 past 9. Now when I go to my calendar, it tells me what's happening in relation to the time zone that I'm in. So that's going to happen now at 9:30 in my time zone.
8 hours, not 7. Okay. Well,
8 hours,
you
not
got the
7.
idea. Yeah, yeah.
Yeah. So
I
let me
get
change this
lost
back.
as soon as daylight saving ends or starts. I'm
Oh
gone
yeah,
for
me too,
about
mate.
3 weeks, and we only just went last week.
Yeah, me too. Even this, you know, I'm clicking on Western Europe London time, but it's actually not London time now. We're in +1.
Mm.
So there we go.
Or you can click DST on. Same thing.
Right. Oh, okay. Okay. All right. Yes, I see. Okay. I'm guessing that'll work then. There we go. Yep, perfect. So that should hopefully answer that.
Yes, and swim in this context, Chris, is exactly the same as any other. It means to stay afloat, don't drown at the end of the day. Are we done,
Yeah.
mate? I haven't got any
Yep.
trades, I don't believe, guys. So we are getting very near the weekly pivot on a lot of these crosses, which is awesome. But I would suggest probably for me, because I'll be going to bed shortly, these are tomorrow's setups now. But yeah, very keen to get up in the morning and see what has set up for me.
Yeah, absolutely. And you know, I just say to everybody, just sit tight. You know, there's no rush. There really is no rush into these markets. These are still likely to come back and give us another bite at this, and a good one, a better one. The second bite is always the best one. So don't rush it. You know, don't panic if it hasn't come back yet. It's still likely to do so at some point. So we will wait and see when that happens, and get the price that we want. No big deal. So last one tomorrow, mate. Yep, tomorrow we'll be back. You are more than welcome, Helen. Back at 5 to 8, same trade time, same trade channel. We'll see you for the last time in the week, and we will do some journaling on for the US session, maybe even for the UK session if it's quiet. But we'll do some journaling tomorrow, just to kind of keep that nice and fresh. But I really want to get everybody into that and make sure everybody's doing it. So we'll have a little bit of a test. So everybody, update your journals for the week. Tonight or tomorrow night, it doesn't really matter, but get those journals written.
I can hear you. I've just lost contact. Can't hear what you're saying.
Can't hear what I'm saying. Okay, well, Jeff's.
I'm just kidding.
I'm slow today. All right, well, we will go anyway. It is that time of day. Oh, I'll speak to you in about 5 minutes, Jeff. We'll have a quick one.
Right, mate. Happy days. Thank you, guys. We'll also tell you how to get into next week's US show, which will be different to this week. Yes. Have a good one, guys. Thank you.
Have a good one. Thanks, Kumar. Thanks, Helen. Thanks, Lewis. Thanks, StarMax. Thanks, Chris, and everybody else that's got involved. PL, Crystal, Fad. Yeah, thanks for all your input. We'll speak to you. Thanks, John. We'll see you tomorrow morning.
You got it. Bye-bye for now.